startups have high failure rates.
That's true. That's
Very
true.
true.
Yeah, that's
Really
true.
high failure rates.
Yeah.
And what happened is, 30%, 40% of the companies we invest in are just going to die. If I'm a VC and invest in a company, and after 5 to 6 years, they are in 5 to 10 million annual revenues,
Yeah.
which can seem like a really good result.
Yeah.
I have actually not achieved my target. I have failed really. I need huge exponential returns. There has been a significant drop into the VC investments in general, and that's mostly driven by the interest rates going up in the US.
And at this point,
Yeah.
is this business profitable?
No.
Oh, good.
Profit is
Okay.
just a fancy word.
Okay.
That I've never thought about at this stage.
Okay,
It's more
okay.
like,
Alright.
hopefully one day
One day.
we'll be profitable. It's better to own 1% of $1 trillion company than 100% of a lower company valuation. So you might be the greatest founder, but you can never build a great business on your own. You need a strong team. So you really need to show how strong your team is and how you can actually convince them to stay with you and work with you.
Hi, everyone. Welcome to today's episode. My name is Linda Keraithe. On our last episode, we had a discussion on startups and how entrepreneurs can position themselves, or what do they need to do to establish good businesses that are worth selling. And today, we're having a very interesting discussion on venture capital. On my chair today is Florent Nduwayezu. Florent, I would say, is an expert in VC. Thank you for joining us today, Flo. You could start us off by introducing yourself, tell us what you do and how you are an expert in this.
Wow, okay. Thanks, Linda. Really happy to be here. I looked at some of the previous episodes and was really, really excited to be part of this. Really good work, actually. Not just you, but also Amos and the whole team. My name is Florent Nduwayezu. I usually go by Flo. It's just easier to pronounce for most English speakers. Originally, I'm actually from Burundi. I'm not Kenyan, but I guess I can also claim the Kenyan card. I have been here for the last 12 years. I really love being here. I came here to study and then eventually decided to stay. I started my career in management consulting, right? So I was basically working on two fronts. One, I was supporting investors and also development partners to figure out their strategy in different parts of the continent, right? Spent a lot of time in the Francophone side of Africa, where I was basically working mostly with the FIs, to determine which kind of key sectors they should really focus on. And that really revealed a huge gap that startups, one, do not have support internally. And then secondly, as a reason for that, do not access capital. So what I ended up doing most of the time, I was fractional CFO for most startups. Did it in Cameroon, did it in Mali, a bit also in Senegal, which was a great experience. I'd never been on that side. They also speak French like Burundians. So it was good to relate to that front. And that was really great, and that really encouraged me to join the investment space. I used to talk to startups, and the first thing they would tell me is, "Hey, we need to fundraise like yesterday. We have 2 months of runway. We need to fundraise." So I thought I could fix the issue and join the investment space, but I realized it's actually more complex than that. I initially joined a debt company called Talenton that you might be familiar with.
Yeah.
And basically I was, at that time, I was the only one on the ground. But eventually, they recruited a bigger and better team, mostly providing debt financing to growth stage businesses in Africa, which was a great experience, great team. But I really felt like I really wanted to work on the earlier stage. We have quite a young continent, not just in terms of young people, but also how much we have achieved. And I think we need really innovative models. And I think to establish that, you really have to do it at the early stage.
Yeah.
So I thought maybe that's where I should play. And I worked for a family office based in Denmark for a short period of time. And then eventually join a VC fund that I'm currently working with, where we invest in pre-seed to Series A startups, providing them with equity financing and also support in other areas. We have just set up, we have 2 businesses that we've invested in so far and looking to do more, right? So really, really excited to be here. I'm really passionate about startups and supporting them on different fronts. On the personal side, I also invest on my own in startups as an angel investor. I've done a couple of investments across the continent, in Kenya, in Uganda, in Morocco, in Egypt. So yeah, very, very excited to be part of this discussion and looking forward to it. Let's get into it.
Wow, Flo. I told you guys, this guy is it.
I wish I am.
in this in this VC space. And so, Flo, we can start our discussion by talking about the VC ecosystem in Africa, because it has been said that when you're setting up in emerging markets, fundraising is not just necessary; it is survival. So let's delve into that.
Yeah, fundraising is a tough journey. Running a startup is really chaotic, right? I got a preview of that when I was in consulting and working closely with startups. It's a journey that requires very much flexibility. It's a journey that requires to adapt to the market quite oftentimes, right? And at the same time, you also have to grow, right? Because startup, being static at the same place doesn't really work, right? Growth is the only option. And to achieve that, most of the time you might require fundraising, and it's not an easy journey. But I think for the last couple of years we have seen encouraging signs that there can be good results, not just for investors but also for entrepreneurs and the ecosystem and the countries in general, right? And I think we should be optimistic about this space, right? African entrepreneurs are very resourceful. They have managed to show it in areas where there is limited funding, and I'm sure they will continue showing it. So we just need to continue supporting them. Yeah.
Okay, so looking at the numbers, in 2024, the VC funding dropped.
Yeah.
So did the number of deals. And that was like a second drop from what we saw in 2023.
Sure. Yeah.
So you say we are supposed to remain optimistic, but the numbers are telling a different story. So what is happening there? Where is Africa coming from? Where are we at right now? And where is the system or the ecosystem headed?
Yeah, as a VC investor, I think I'm always optimistic, right? I talk to entrepreneurs. They're literally at the beginning of the journey and they're selling me a dream in the next 5 to 10 years. This is where we're going to be, billions worth type of company. So I always have to be optimistic. And it is true, right? The last couple of years have been really hard for the ecosystem. But I think we have to put it into context, right? It's not just Africa. It's all the markets, right? If you look at the US market, European, Indian markets, there has been a significant drop into the VC investments in general. And that's mostly driven by the interest rates going up in the US, right? So for the longest time, by the longest time I mean post the 2008 financial crisis, what the government of the US had done was to reduce interest rates so that there's more investment coming into the space, right? And that took, a huge number of years, and we saw some of the interesting growth, not just for early stage investments, but investments in general, right, in companies, right? But towards 2021, interest rates started going up again, and this now triggered this whole reaction where we saw capital being pulled out from most investors as they could actually get better returns investing in safer investments like bonds and other instruments like that, right? So it's not just an African thing, right? It's an international thing. So yeah, the last 2-3 years have been really hard, but I will say we are starting to see some of this pick up. Every single day, the first thing I do, other than exercising, obviously, because I want to live till 150, is read the news. And I see more deals being announced, and I'm very optimistic that 2025 is going to be a better year for the continent. So yeah, we're starting to see more momentum happening, right? But yeah, it was a really difficult time the last couple of years. We saw a lot of disappointing stories in the news, but I'm sure again, I have to end on a positive note that the future is really bright for the continent and the VC ecosystem.
So what you're saying is the decline in deals and in funding was basically because of global macroeconomic shocks.
Mostly.
Not really perspective on funding or perspective of founders or not there being good deals for them to get funding.
It trickles down, right?
Okay.
When there's fewer opportunity, when there's fewer investment funds that are deploying, then even the deals reduce, right?
Yeah.
So because we saw that on the macro level, that kind of affected what's happening on the ground, right?
Okay.
So I wouldn't really put it on the startups. It's more of like macro factors, and I think that's something that always happens in the journey of a startup. There are ups and downs, and you just need to ensure that you can sustain yourself in the long run. We talk about. I'm hopping on the podcast. We talk about financial wellness. How do you ensure that you are not too dependent on investors? So I think that's something that actually can teach us a lot in this young journey of startups.
Okay. And so where are we seeing the deal flow? Are there specific sectors or specific segments that VCs are more keen on right now compared to maybe the last 3 years?
Okay.
Yeah.
Perfect. I wouldn't want to say like these are the specific sectors that are hot, because most of the time, it derails entrepreneurs to focus on those. I always encourage entrepreneurs to pursue sectors and areas that they're passionate about, that are something that is interesting for them to build in. That's where I want to start. But obviously, they are the ones that are making waves on the continent. It's obviously fintech, and it's good to unpack that, right? Because if you think about how VC investments has been the last couple of years, it hasn't always been like that.
Yeah.
But in the last couple of years, VC investment has been more on the application layer. And by that, I mean there is an infrastructure layer that has already been built and someone is building on top of it. So that's the application layer, right?
Yeah.
And I think that's fintech is really one of the key areas that can take advantage of that, right? If you think about, their banks already established, right? Telecoms, M-Pesa is a really good example that we like giving, right? So as a fintech, it's easy to build on top of those existing infrastructure, but it's not that it's the only space that is hot or that is worth building in, but it's just easier for VCs to understand because there is that infrastructure layer. So that's point number one. Secondly, the other sectors that are coming up, mostly driven by interest in macro factors. So for instance, climate tech is one area that we have seen a lot of funding, especially in the last 1 year. Investments going towards. So again, the infrastructure layer is really missing on that point, right? So it will take time before we see the results. And we are seeing, DFIs and other development partners, putting a lot of resources in that, especially as we think about the transition to a greener economy. That's the second area. Previously, e-commerce, especially in the highs of the VC funding in 2020, 2021, was, a key area that we saw a lot of funding going to. It was COVID, most people were home, so deliveries were a key element people were thinking about. Also, internationally speaking, there was a lot of interest in e-commerce. Right now, not as much, right? Especially with some of the companies that had received huge funding going down. So that kind of got deprioritized. But there are many sectors. I would just encourage entrepreneurs to think about what they're passionate about. As long as you have good execution, there's always going to be funding for what you're building.
Oh, thank you. Thank you for that insight, Flo.
Thanks.
And so we get into the fundraising. And here I know you'll talk as an investor. So maybe you could enlighten us and you could have a discussion on the different stages of funding or different stages of funding needs for startups.
Yeah. The life of a startup is an interesting one, right? Especially at the early stage where there is minimum traction. it can seem a bit subjective, right? Why will I invest in this person and not this other person?
Yeah.
Right. So storytelling is very much interesting, especially is very much important, especially in developed markets, right? Where people are driven by a vision, where this is going to go. But before I talk about that, I think what's going to be important to understand is the type of metrics and type of returns that venture capital really look at.
Yeah.
Right. If I'm a VC and invest in a company, and after 5 to 6 years they are in 5 to 10 million annual revenues, which can seem like a really good result.
Yeah.
I have actually not achieved my target. I have failed really. I need huge exponential returns, right?
Okay.
For it to make sense, because how I like to think about it is, let's say I want to raise a VC fund. Just let me put the perspective of an investor, right? Let's say I want to raise a VC fund, which is maybe 100 million, right? So I go to like someone called Thompson in the US, and I tell him, hey, I really want to raise this 100 million. Can you give me 100 million, right? Thompson can put his money in bonds in the US and get 5 to 6% every single year, zero risk, guaranteed 5 to 6%, right? Okay, that's the option number one. Option number two, he can invest in the stock exchange market and get over maybe the 20, 30 years, 10 to 12% guaranteed, right?
Yeah.
If you buy an index on the S&P 500, you are guaranteed 10 to 12% return, which is a very risk-averse opportunity.
Yeah,
right?
That's true. That's true. Yeah.
Okay, that's option number two. He can invest in Europe, he can invest in other markets, and also get good returns, right? So if I'm telling him, just keep all those things, forget about bonds, forget about stock exchange, forget about all these other developed markets. I want to invest in the riskiest place that there is in the world, that is Africa. I really need to give him strong returns.
That's true.
Right? I really need to give him really good returns. And if I have $100 million fund, he will expect at least 4 to 5 times. It's not just about the high returns. It's also about the duration. Because we see, people like to say it's a short-term investment, but it's a long-term investment. We only see the returns after 10 years most of the time. People raise 10-year funds, right? So it will take 10 years to see those returns. He really wants to see at least 4x. So if he gives you 100 million,
he gets his
400 million, right? So that's point number one, right? And then if you think about that also, startups have high failure rates.
That's true. That's true. Yeah, that's
really high failure rates. And what happened is, 30%, 40% of the companies you invest in are just going to die. Right? Another 30 to 40% will just do okay, but not have the exponential returns that we expect. And at the end of the day, it's only like a 20, 30% that will generate most of the return, right? So for instance, if I invest in 10 companies, I have $100 million and I invest in 10 companies, I give each of them 10 million, right? Just hypothetically speaking. And let's say I only have 3 companies that are going to generate the returns, right? So if the 30 million I give them should be able to generate at least 300 or 400 million. Right. So that's 100 or even more, 100x return on your investment, right? So if you think about, investing at a company when they are worth 10 million and they need to generate 100 or 200x on that, right? That's close to a unicorn, 1 billion or even more, right? So it has to be very exponential returns, right? So that's why the storytelling is very interesting. Going back to your question, what investors consider at different stages, especially in the early stage, the storytelling has to be really interesting, right? It has to be like a vision that is very big to the point that, you are able to achieve that kind of 1 billion.
So what you're saying is founders have to prove traction.
Well, that's a very good point. But you really, not just traction, but also need to show like a path.
A path to
reach that huge scalability, right?
Could you talk about angel investing and pre-seed? And what at that point, since this is pre-revenue, how then does a founder convince an investor to put in money into what you'd call a story? At
each stage of investing, it's about de-risking the next stage, right? So from the idea stage to the next level, there has to be some form of de-risking that you have done, right? So talking to the customers, understanding their pain points, right? Ensure that, what I'm trying to build basically has some form of value addition to the customer, right? So that can come in different forms, right? You have some tests that you have done with potential customers, right? You have, some form of generated revenues. I know we always say pre-revenue, but in Africa,
really?
It's really hard.
Really
hard to see startups get any form of funding
without
generating anything, right?
Okay. So pre-seed,
there's still some form of revenue, right?
Okay.
Testing the idea with the customers to see that there is actually traction here, that people are interested in this product and they want to hear more. The best way to do that is to think, let's say I want to sell a phone, right? Like I want to sell a phone to a few customers. The thing is, think through who has the most pain point, right? Like maybe you are a business person and every single day you talk to like 1,000 people, but you have maybe like a small phone, but you need like a smartphone to talk on WhatsApp, right? This is someone who has the most pain, really going through this thing. So you have to think through like the person who really needs the most this product and really focus on them, because one, they will instantly adopt your product because it's solving an issue that no one else is helping them with. And then secondly, it can also give you the visibility to iterate, right? Iterate and, have a product that is, better structured to conquer the rest of the market, right? So you need to show some form of traction and some form of these things that can be interesting.
Okay.
Obviously, it depends. But if you're a first-time founder, most of the time you really need to see. You really need to show that there is traction and there is appetite to what you are building, right? So that's one. The second thing, you really have to get a deep understanding of the space you are in, right? One thing I really like, maybe this is also a personal thing, but I really like numbers-driven founders who understand, all the margin. If I tweak this is how it reflects in the founder in the product, right? If basically, what I like to say is you need to have like an income statement of your customers, right? This is how much money they make. This is their costs, right? Yeah. And this is their net profit. This is how much they take home at the end of the day, right? So with my product, they're either increasing their revenues by, this amount or reducing their costs by this amount. And it can be, I like to say, it can be a small increment. It has to be transformational and not marginal, right? It has to be like, 3-4 times better than what they had previously. If it's just 10-20%, it's a high risk for them to take it.
Okay.
Right? It has to be like a significant improvement to what they're using before, right? An example I like to give is when I came to Kenya, I used to, when going back home to Burundi, I used to take a taxi, it would cost me like 2,000 to go from where I used to live to the airport, right? And then when Uber came, those prices literally dropped to like 600 shillings, right? That's an exponential increase in my pocket, right? And I really want to save that money, right? If it was maybe like 5-10%, I'm like, okay, I don't know, man. Is it worth doing it? Especially if it's like high stakes. It's very hard for someone to really move. If it doesn't move the needle, it's really hard for the person to adopt. So you really need to think about something that exponentially increases.
Okay, so Flo, let us talk about pitch decks. Now that you've talked about the income statement, they say a pitch deck is not just a story, it's a trailer to a movie that you want to get investors watching. So how do founders need to structure their pitch decks? How should it be for them to get interest, maybe from the first page of the deck?
Perfect. So we've already talked about what kind of exits we need to see, right? Huge returns from the beginning. Like you have to have a vision for where we want to go, right? And it has to be a huge picture, right? So I think you should be able to communicate that from day one, from the first page, right? Also need to be conscious that VCs receive 20-30 decks every single day. You really want to be, very unique in the way you structure it so that you can capture the attention of the person in front of the screen. And the first thing is really to think about the market. How big is this market, right? Talk about, how the market is really huge. This is multiple billion dollars opportunity. That's one. And secondly, it's not just that it's a big opportunity, but it's just unserved.
Yeah.
Right. So this is all the players who are in this space, but no one is really providing any strong solution to what we are seeing. Right. So now you have already captured their attention because like, okay, there's this huge problem that can generate huge impact, huge returns, but no one is actually servicing it. Right.
Yeah.
And now that you have that, this is what I'm thinking about.
Yeah.
This is the solution I'm thinking about.
Yeah.
It's very, very, very critical. I can emphasize this. I have to emphasize this very much because I don't see it a lot. To think about the numbers at each stage, right?
Oh, okay.
Especially like from day one, like from every slide one.
Yeah.
Think about how big is this market? This is the purchasing power of each customers. Right? This is how much each of the customers really has to dedicate to this product as we think. And from the solution, this is what you're thinking about, right?
Okay.
This is how it will improve their current financial status, right? This is how it will improve what they are doing. From there, most people usually go to the product and everything, but I would suggest highly to go to the team.
Oh wow!
Now that you have the solution, why are you the right team to build this? As we've already said, from day one, it's just a team, right?
Is there bias to locally owned or local?
That's where you wanna go.
I want to go there. I want to go there. Since you've worked with international funds,
sure.
Is there bias to locally owned businesses in comparison to maybe a mix of both international and an African founder?
Yeah, there's a culture difference, I will say. It's like you and I can relate, I also speak Swahili. We can relate to different things.
Yeah.
There are experiences we have gone through growing up that are similar, right? We do the same kind of jobs, right? If you were to pitch to me, I'm like, yeah, that's Linda, man. She understands her space. It's subconscious, but there's always that bias that most investors have, right? It's not just a culture or Kenyan or non-Kenyan. It's also like a gender thing, right?
Yeah.
We have seen less funding going to women-led businesses.
Yeah, true.
Even though women-led businesses have proved several times
higher success rates.
So there's always that bias, right? And I think that's not something to change on the entrepreneur side, but more on the investor side, right? To ensure that you are, you are open to new ideas and way of thinking, right? So that's one. And the second thing, as we already said, outliers is what we are looking at as investors. And if you invest in what seems like, this is a good opportunity, it's just the obvious choices, you won't get the outliers. So you really have to bet on the not so common or not so like popular kind of entrepreneur.
Yeah.
And I think that's what we should be doing more. But yeah, there is truly a bias. But one thing that makes me very happy, or at least that's encouraging, is that I was looking at who runs Church Africa, which is one of the prominent VCs in Africa right now. He was basically saying, out of the unicorns that we have, the 8 or 9 of them, more than 50% are locally run, right? Locally founded.
Yeah.
So that really shows you that the understanding of a market is most of the time.
It's more important.
Yeah, right.
Okay.
So yeah, we need to do better as investors, but couldn't agree with you. Couldn't agree with you more. There is a strong bias.